What if the value of your money isn't really decided by the free market? What if the dollar in your wallet, the pound in your account, or the savings you've trusted for decades are being quietly shaped by currency manipulation happening behind closed doors? Welcome to the Financial Codex. If you searched for currency manipulation explained, here is what most people never hear. Western audiences are taught that markets are fair and self-serious. Yet, we keep witnessing dollar devaluation, inflation spikes, and sudden currency shifts. So let's ask the central dramatic question again. Is currency manipulation a defensive tool used by governments, or the most legal financial weapon ever created? Imagine waking up, checking your bank balance, and everything looks normal, while in reality, central bank manipulation has already reduced your purchasing power without your consent. No headline, no warning. Just silent financial engineering, changing what your money can buy. Before modern central banks mastered how governments manipulate currency, money was simple and honest. Gold meant gold, and currency had intrinsic value. But in 1971, when the U.S. abandoned the gold standard, the U.S. dollar became a trust-based currency. That single decision opened the door for modern currency manipulation strategies. Governments discovered they could weaken their currency to boost exports, strengthen it to curb inflation, or adjust it to influence global trade. This marked the true beginning of currency manipulation explained in its modern form. From that moment forward, the global financial system became an experiment in controlled money creation. By the 1980s and 1990s, how governments manipulate currency became standard economic policy. Japan weakened the yen to dominate exports. China managed the yuan to win trade advantages, and Western central banks began aggressively steering interest rates. The Federal Reserve learned how to indirectly control the dollar through rate hikes, quantitative easing, and liquidity injections. Every decision shaped global money flows. Wall Street thrived, while Main Street struggled to understand why living costs kept rising. This is where currency manipulation examples began affecting ordinary life. And the question returned, is this protection or financial control disguised as stability? Consider the real-world impact. David, a factory worker in Ohio, trusted the system. He followed the rules, secured a mortgage, and invested in the American dream. Then the 2008 financial crisis struck, fueled by central bank manipulation and excessive money printing. The housing market collapsed, the dollar weakened, and his life unraveled. While corporations were rescued, David lost his home. This is what currency manipulation explained looks like in reality. It is not theoretical. It reshapes lives without warning. Every cycle of currency manipulation follows a predictable pattern. Artificial growth is created through easy money. Cheap credit fuels, asset bubbles, debt rises. Optimism blinds warning signs, then panic strikes. Governments intervene, and the fallout destroys stability. This cycle is repeated globally and is one of the clearest currency manipulation examples. The real question is not if the next collapse will happen, but how soon. The 2008 crisis exposed more than bad loans. It revealed how central bank manipulation distorts reality. Trillions were printed, weakening purchasing power and accelerating inflation. The stock market recovered, but the average worker paid the price. Retirees watched their savings erode. Families struggled to survive rising costs. This was dollar devaluation in slow motion, happening under the umbrella of economic rescue. Today, currency manipulation has evolved into digital control. It now involves algorithmic trading, monetary policy signals, and global liquidity flows. A single Federal Reserve announcement can trigger global currency shifts. This is modern currency manipulation explained for the digital era, where money is controlled through interest rate policy and artificial stabilization. Again, we ask, is this a legitimate defensive strategy or a silent system of economic dominance? Emma, a tech entrepreneur in Silicon Valley, benefited from years of low interest rates when money was cheap and optimism was high. But when central banks shifted policy and raised rates, the flow of capital stopped. Her startup collapsed, not due to poor vision, but due to monetary recalibration. This is how governments manipulate currency in a way that directly reshapes innovation and opportunity. Every so-called solution reveals a deeper flaw. More printing creates inflation. Rate hikes slow growth. Stimulus checks fading effectiveness. Governments claim these measures are temporary. Yet history shows currency manipulation policies become permanent features of the system. The phrase everyone repeats, "This is temporary," has quietly become one of the strongest signals of long-term disruption. Currency manipulation is not just economic, it is psychological. The design of money itself builds trust, but once that trust weakens, instability spreads. Rising housing costs, stagnant wages, and shrinking savings are symptoms of a system driven by hidden monetary control mechanisms. We now stand at a critical moment where global debt is at historic highs. Digital currencies are expanding, and public trust is eroding. These are not coincidences. They are warning signs of a system preparing for another recalibration. History is not repeating. It is rehearsing its next financial transformation. So we return once more to the core question that defines currency manipulation explained. Is this a defensive economic tool or the most legal financial weapon ever created? And if currency can be reshaped at will, who controls that power and who pays the final price? If governments already influence the value of money through policy and central authority, what happens when digital money becomes the norm? When programmable currencies replace cash, will you still control your wealth? Or will centralized systems control your financial freedom? This is the next evolution of currency manipulation and global surveillance, and it may redefine the meaning of ownership itself. The reality is clear. Currency manipulation is not a theory. It is an active policy shaping your costs of living, your savings, and your future. Awareness is your greatest defense against invisible financial forces. Understanding how governments manipulate currency gives you clarity in a world of engineered uncertainty. Now the real question is yours to answer. Do you believe currency manipulation protects economic stability? Or is it power exerted silently over global citizens? Share your perspective, identify the hidden patterns, and stay alert. Because the next chapter reveals the rise of digital money and total financial surveillance. The true challenge is no longer whether change is coming, but whether you will recognize it before it quietly reshapes your world. Please like this video, subscribe for more insights, and share your perspectives below. Together, let's continue decoding the world of money.